What's going on? Welcome back to the channel. So today we're going to talk to you about Rivian. They just dropped their earnings. I want to go over the absolute key highlights from the earnings that you need to kind of take away from all of it, what the support and resistance points you need to watch for tomorrow, and what analysts are saying. Before we get into any of that, make sure to hit that thumbs up, and with that, let's get right to it. So Rivian did drop their earnings after hours. It did cause a hell of a lot of volatility, so it looks like roughly around 1290 something to the low, 1480 the high, so crazy swings, and a lot of that is stemming from what they gave for future guidance, but ultimately it did land about 0.44% in the green. During the overnight trading, nothing really crazy, still kind of staking relatively flat. Based on the implied move though, so let's pull up Rivian. This is Alibaba. So looking at Rivian, there was a 11.62% implied move, so definitely was on the timid end as far as that. Looking at what shorts did, they kind of were returning leading into their earnings, meaning that they kind of felt that it was going to be a beat. It all comes down to future guidance. A lot of these EVs, I think, especially the market already knows it's not profitable, so earnings per share as well as revenue, I think largely is just being brushed under the rug in a lot of cases, but it is going to be their future guidance. And that is one thing that, again, I'm going to go over near the end of the video that wasn't necessarily all that great. But of the options that was done today, you do see a consensus for it to be roughly between that $15 to $16 range. And then the bears are anticipating for it to be sub 11. So kind of polar opposites when it comes down to that. With it at $13.61, it is trading between this pivot and this S1. So 1208 is going to be that strong support. Flip side, 1379 will be that key point that you really want to watch for Rivian to close above tomorrow. That is a must do if you're going to see any sort of recovery. So again, $13.79. But regardless, I think you're going to have a lot of volatility all in all. But even though their earnings was done after hours, you did see one analyst rating come out, and that was CFRA. Garrett, who has a 57% success rating, gave a $10 price target. Yesterday, which doesn't make that much sense, so the day before their earnings, you did have a sell, $6.10. Bernstein and the analyst has a 50% success rating. I personally always find that comical whenever a analyst gives a rating the day before earnings, and I think that is purposefully just to kill any hype, maybe bring the stock price down a little bit more, show how the earnings might be so much more dramatic possibly. But honestly, I've yet to find out anyone to give me a good concrete answer why analysts want to give a rating the day before earnings, which changes fundamentally everything that you're basing your price target on. So I think there's just a hell of a lot of manipulation. But then again, the analyst has a 50% success rating, so might as well work at McDonald's. But aside from that though, average price target of all the ratings, $13.92, and that does represent a 2.28% upside. I will do a follow-up video over the weekend, just going over some of the data points and what analysts have been saying since then, because I do anticipate most likely another good, probably 6 other ratings that's based on at least historically right here. But with that said, let's get right to the future guidance. So give yourself a shout out on a side note if you own Rivian, if you sold it, and what was your kind of key takeaways from the earnings that you generally did like. But with all that said, let's get right to it.
Rivian targets 46,000 to 51,000 vehicle deliveries in 2025 while advancing R2 production. Earnings call insights, Rivian Automotive, Q4 2024 management view. CEO RJ Scaringe highlighted a positive gross margin milestone achieved in Q4 2024, supported by a $31,000 reduction in COGS per vehicle compared to Q4 2023. He attributed this to cost controls, higher average selling prices, and an increase in regulatory credit revenue. The launch of the Tri-Motor, with strong consumer reception, was also emphasized. Scaringe announced the introduction of the Dune edition of the Tri-Motor and shared excitement for the R2 program, which is set for launch in the first half of 2026. He detailed significant cost reductions planned for R2, including a bill of materials at approximately half the cost of R1. CFO 𝗪𝗓𝗡𝗖𝗧 reported $1.5 billion in revenue for the automotive segment, With a segment-level gross profit of $110 million and a 7% gross margin, she highlighted $300 million in regulatory credit sales and a $729 million year-over-year improvement in adjusted EBITDA. McDonough shared that Rivian ended Q4 with $7.7 billion in cash equivalents and short-term investments. She also noted Rivian's receipt of $2.3 billion in funding from the Volkswagen Group joint venture and the $6.6 billion Department of Energy loan. Outlook. Rivian provided guidance for 2025 vehicle deliveries between 46,000 and 51,000 units, with an expected Q1 delivery volume of approximately 8,000 vehicles. The company anticipates Q1 production at roughly 14,000 vehicles. Full year 2025 gross profit is projected to be modest, driven by stronger contributions from the software and services segment, which is expected to generate over $1 billion in revenue. Adjusted EBITDA losses for 2025 are expected to improve significantly, ranging between $1.7 billion and $1.9 billion. Capital expenditures are forecasted between $1.6 billion and $1.7 billion, driven by the plant expansion in Normal, Illinois, and supplier tooling for R2 financial results. Rivian reported a $1.5 billion automotive segment revenue in Q4 2024, which included nearly $300 million in regulatory credit sales. The software and services segment generated $214 million in revenue with a gross margin of 28%. The company achieved its first positive gross margin in Q4 2024, with significant cost reductions in material, conversion, and depreciation costs per vehicle. Adjusted EBITDA losses narrowed to $277 million in Q4 2024, marking the company's best adjusted EBITDA performance since production began. Cash equivalents and short-term investments increased by $1 billion quarter-over-quarter, bolstered by cash received from the Volkswagen joint venture. Q&A. Dan Levy, Barclays. Asked about COGS trajectory and its implications for R2. CEO Scaringe detailed cost reductions achieved through resourcing over half of R1's bill of materials and noted that R2's projected bill of materials would be approximately half that of R1. Adam Jonas, Morgan Stanley, inquired about Rivian's autonomy platform and related spending. Scaringe highlighted Rivian's end-to-end autonomy approach and its 10x improvement in compute platform capacity, with a focus on leveraging AI for training and data. Mark Delaney, Goldman Sachs. Asked about growth in software and services revenue, McDonough projected over $1 billion in 2025 revenue for the segment, driven by licensing agreements, remarketing, and repair services. George Gianarikas, Canaccord Genuity, queried about quarterly delivery cadence for 2025. Scaringe confirmed a planned one-month plant shutdown in H2 2025 to prepare for R2 production, which is factored into the guidance. Sentiment analysis. Analysts voiced concerns regarding potential policy changes, regulatory credit reliance, and the impact of plant shutdowns. Tone was neutral to slightly skeptical, with pressing questions on cost structure and delivery cadence. Management maintained a confident tone during prepared remarks, emphasizing achievements in cost reductions and profitability milestones. However, some responses in the Q&A section were more defensive, particularly when discussing regulatory and demand uncertainties. Compared to the previous quarter, analysts showed slightly more optimism regarding Rivian's cost reduction trajectory, but remained cautious about external risks. Management's tone was consistent, with an emphasis on progress and long-term growth potential. Quarter-over-quarter comparison. Rivian achieved a positive gross margin in Q4 2024, a significant improvement over Q3's negative gross profit. Regulatory credit revenue increased substantially quarter-over-quarter. R2 program development progressed, with sourcing of 95% of its bill of materials, compared to 85% in Q3. The cost structure for R2 has been further optimized. Management tone remained focused on cost efficiency, though Q4 discussions included more concrete milestones for R2 and the Volkswagen joint venture. Analysts continued to focus on cost improvements and production challenges, with slightly less emphasis on supply chain disruptions compared to Q3. Risks and concerns. Management flagged potential impacts from policy and regulatory changes, including adjustments to incentives and tariffs, as risks for 2025 performance. Analysts raised concerns about Rivian's reliance on regulatory credit sales and the potential effects of a challenging demand environment. The planned plant shutdown in H2 2025 could impact production and delivery volumes, though Rivian has factored this into its guidance. Final takeaway. Rivian Automotive achieved a critical milestone with its first positive gross margin in Q4 2024, driven by cost reductions and regulatory credit revenue. The company is focused on scaling its R2 program, targeting a launch in 2026 with substantial cost improvements. Guidance for 2025 includes deliveries of 46,000 to 51 vehicles and continued progress in the software and services segment. While analysts remain cautious about external risks and regulatory credit reliance, Rivian's advancements in cost structure and production efficiency offer promising long-term growth potential.